Hey everyone, excited to be back for this week's edition of Frequently Asked Questions for Commercial Real Estate. In today's video, what I wanted to do was provide you guys with an update on what I think is going to happen in the commercial real estate industry over the next 12 to 18 months. As you guys know, we have been in the COVID-19 pandemic over the last year and a half, and as we start edging our way out of this situation, I think that the commercial real estate industry is going to change really drastically going forward over the next 12 to 18 months. So today I wanted to provide you guys with my insights on that matter. Now, before we dive into this episode, I would really appreciate if you could like and subscribe to this channel. It really helps with the YouTube algorithm and ensures more and more people can hear this message and learn about the many facets of commercial real estate. So, as we're currently recording this video, it is mid-year 2021. We've gone through about a year, almost a year and a half of experiencing the COVID-19 pandemic. And as more and more people get vaccinated, we're starting to get back to some semblance of normalcy within the economy. Now, the Federal Reserve has kept interest rates quite low over this period, which has stimulated investment in the real estate, whether that's residential or commercial. So you're starting to see investment property in particular, so occupied multifamily, industrial, retail, regardless of the type of investment property, you're starting to see asset prices increase substantially. Over the last, let's say, 3 months, the Federal Reserve has really been taking a good look at how the inflation rate has been, what's been happening with the inflation rate, primarily related to the amount of money that we've been printing through this pandemic. As you guys may know, we printed trillions of dollars last year in order to help stimulate the economy and keep us from going into a severe recession because many people had lost their job as a result of the COVID-19 pandemic. And as a result, we received stimulus checks and unemployment benefits were buffered up so that people who were unemployed at that period of time could sustain themselves until their job opportunities presented themselves again, or they were able to find new opportunities in the economy as a result of us opening up and people starting to spend in the economy again. Now, the main issue that I see over the next 6 to 12, maybe 18 months is that the Federal Reserve can no longer continue to lower interest rates. We're almost at 0%. Really, the Fed doesn't have that lever anymore to pull if we experience an economic downturn. Along with that, the Fed cannot keep interest rates as low as they have been over a period of time because we're already starting to see inflation. Some of the numbers came back from, I think it was either May or June, and the Consumer Price Index, which is an index that helps track the cost of goods, commonly purchased goods like milk, cheese, milk, bread, etc., throughout the economy, which is a good indicator of what the inflation rate is. The CPI for the previous month or the month before was roughly 5%, which is higher than we've seen in almost a decade. So inflation is coming as a result of all the stimulus that we've provided and the fact that people still want to buy commercial real estate and other hard assets because they realize that the stock market is inflated currently, and one of the best inflation hedges for investments is real estate. So you're starting to continue to see asset prices continually rise. At a certain point, the Federal Reserve is going to have to start raising interest rates to kind of slow down the economy a bit. Along with that, over the next 6 to 12 months, I also foresee that our supply chain is going to get organized again, and we're going to start seeing construction prices, primarily related to raw materials, start to decrease. Therefore, developers are going to try to catch up with the demand that has been present over the last 6 to 12 months, and they're going to start developing projects over the next 12 to 18 months. Now, what's going to happen? Because interest rates will rise at some point, I don't know exactly when, but I foresee in the next year or so, we're going to start seeing interest rates tick up. Demand for these investment properties are going to start to decline. Along with that, as raw material prices continue to drop, developers are going to try to catch up to the demand that is currently present. Therefore, supply is going to increase. At a certain point, we're going to reach an equilibrium, but what's probably going to happen is all these projects that are starting to be created over the next 12 to 18 months will start to surpass the demand for these types of assets. And I think we'll start seeing asset prices begin to drop. And as a result, I think we're going to start seeing some foreclosures, in particular in the commercial real estate space over the next 12 to 18 months. So if you're looking in the market for these types of opportunities, I believe they will be coming in the next 12 to 18 months. If you're looking to identify some of these opportunities, feel free to give me a call. I'm a commercial real estate agent here in Louisville, Kentucky, and I'd be happy to help you do so. Again, my number is 502-536-7315, or you can reach me via email at raphael@grisantigroup.com. Also, if you like this channel, I would really appreciate it if you could like and subscribe. Again, like I said before, it really helps with the YouTube algorithm and ensures more and more people can hear this message. So thanks again for tuning in. We'll see you guys next week.